Good afternoon, everybody. Stan and Jack here for a webinar called Ask Us. This is a subscriber-only webinar, and what we want to do, and I'll tell you what, while I'm explaining the webinar, I would encourage you guys, go ahead and key in your questions in the Questions tab, because basically what this webinar is about, it's about your questions as a subscriber. And especially if you're new, some of the language might be something you're not used to, or you may have a specific question on technical analysis, or you might want to ask about, what happened on ES today, or whatever it is. So this is more or less an open forum for you guys, for us to talk about whatever is on your mind. So would encourage you to open up the questions tab in your GoToWebinar box and key in your questions, because I think what we're going to do here is just pay attention to your questions, and if we need to go to charts because you have a specific question on a trend line or RSI or a reversal pattern or whatever, we're going to cover it. Okay, so key in your questions and we'll get to them one at a time. Jack, anything you want to add?
No, that's well.
Okay, David is first. Question, how often do you get your structure wrong? Your confidence in your overall structure allows for directional moves. I am just following your structure, but curious how long it took you to begin to perfect your skill with determining structure. Okay, David, and what helps you with structure? Okay, so what helps me with structure? First of all, the obvious thing, trend lines, right? Okay. The other thing that helps you with structure is RSI, so you can understand, how an expansion works. Okay, so you don't get short too soon, and the divergence that happens in an expansion, right? So what I'm trying to communicate, David, is that it's not just looking at a line on a chart. It's not just looking at price. You got to look at price and correlate it with other things, even with other instruments, like the dollar and the euro, and so all of that together helps you look at structure. Okay, and I think that does take time. Now, I think what you have to come up with, David, is a system that works for you. Certainly, you can learn from Jack and I and figure out, hey, this skill, I like it, or this one, I like it. Hey, I put these three things together. I'm a better trader. We really hope that works for you. I mean, that's the intent of the service here. Okay, so I've been at this since '99. I would say in my own history, I would say this. I was trading without understanding structure at all, okay? And I traded the news, and I traded earnings, and I traded options, and so on and so forth. And it wasn't until I got into Elliott Wave, and I got into really looking at real-time indicators. And you have to realize something, 10 years ago, real-time indicators were very different than they are now, okay? So
yeah, things have really evolved.
Yeah, so Jack, what's your take on that question? How long does it take to really have confidence in structure, which is part of, I mean, we look at structure, we look at time, we look at price. I think all three together is what you need to get comfortable with.
And you also need very much the two-sided brain.
Yeah, I agree.
You need to consider not just the obvious outcome, but what is the next most likely outcome. I think in terms of structures, well, I mean, a good example is the one I posted on my free post this morning. The first chart, SPX 1 minute, the rising wedge on it. Very easy. You just draw some trend lines. What does the rally look like? It looks like a rising wedge. 70% of those break down. Mm-hmm. It's I'd been talking in the morning. I mean, Stan and I were chatting as ES was hitting 62 last night, and I said the ideal right shoulder high, because on a decently formed head and shoulders, the both shoulders end up in the same sort of area, even when it's a sloping neckline. It's so I've been saying in chart chat yesterday morning that the ideal right shoulder high would be at 62, but we weren't expecting it to go that high, and we hit 62, and I said, well, here we are at 62.
Yeah.
It's the top so far.
Great call, by the way. Great call.
Yeah. Said we got a nice little short top here. Let's see how it goes. And it delivered. And that with the rising wedge gave me at least thinking that the bears had a decent shot for today. Which they did, and it all delivered pretty well. It's in terms of how long does it take you to get the line? It doesn't take you long to draw a decent trend line, and anyone could have drawn that rising wedge that was the rally yesterday. I'm not sure how many people actually did, but that's because they weren't really looking. You have to be interested enough to actually look at the structure and do basic things, because trend lines are pretty easy. You anchor them at the beginning, and and you see if you're getting, particularly you're looking for sets of 3 hits. You don't need that so much on a support trend line because you know where it starts. So you're running it through next low, etc. But you're looking for decent support trend lines, resistance trend lines, and that one had nice 3-touch resistance trend line. That was a decent rising wedge, and it delivered in spades. How long does it take to get used to doing that? Well, it took me a while. I'd probably put in thousands of hours charting before I was really comfortable and effectively coming up with my own methods for doing things.
Yeah. I think your own methods are very important because you base what you do on observation. The thing I want to say about what Jack just mentioned is there's a book, I believe, called 10,000 Hours. Okay, and it talks about trading. And David, to your question about time, it's like you need 10,000 hours in the chair. I don't know if that helps, but that is about developing not only the technical analysis skills, but probably the more important skill, which is what do you do with technical analysis? Because I can give you the best technical analysis in the world and you can still lose money. Okay, that's proven, frankly. Okay, so there is also the skill of actually trading, and then there's the psychological skill of managing yourself. Okay, so I think it's more than just getting your structure right. I think you got to get some other aspects of being a trader right as well.
There are a lot of things to master to be a trader.
Yeah, I agree. And it's the thing I love about it too. It's always about learning something new. So, next question. Today there were several high downticks. Still, prices fell. Could you explain why prices fell since the New York Stock Exchange tick is a contrary indicator? Well, I don't know that it's a contrary indicator. I think that there's a system that you can trade, like, for example, I just pulled up the dollar tick chart here, Jack. When you see dollar tick down here at minus 1,200, well, from minus 1,200, you can expect a bounce on a 1-minute basis. Okay, this is a 1-minute basis chart. Okay, here we have dollar tick down at minus 1,300. Okay, so when dollar tick is down here in 1,200, 1,300, or even up here, above 1,000, 1,100, 1,200. Remember that one morning we opened at 1,350, and it was a jam job. Okay, it was a jam job. I remember it, and dollar tick was falling while price was going up. Now there is a perfect setup for a short. Okay, it's like the perfect divergence. Okay, so dollar tick is about the number of trades that are coming across the tape, and typically you see climaxes down here at minus 1,200, 1,300, and up here around 1,200 or so on dollar tick. But dollar tick is not a contrary indicator. It is a current indicator of trade volume in terms of how many ticks are coming across the tape in a minute. Okay, so it's not a contrary indicator. I think at certain levels it's a contrary indicator. Okay, any questions?
I've got something to add on that.
Please do.
You've also got to remember there are different sorts of days. I think the distinction between the two main sorts of days I would draw is you've got two-way days, and you've got directional days strongly, and a directional day, the most extreme version of that, of course, is a trend up or a trend down day. Now, on a trend up or a trend down day, you will see multiple, and this is why people lose a lot of money on trend days. On counter-trend trades, you'll see some, if you've got a trend down day, you'll see nice bullish setups, you'll get buy signals, you'll get all sorts of, you'll get you get tick levels, which in a two-way market would deliver a nice bounce, and they don't. You get to a big level that would normally deliver a big bounce, and you don't. And that's because a trend day is like a steamroller.
Yeah.
And it just grinds over everything.
And there's what you see on dollar tick during a trendy day. Okay, you don't see much below 500. It just stays up here, and you might get this at the end of the day. Okay, people getting out of their longs or whatever, but that's your typical trendy day. Yeah, right.
Yeah, so, but the reality is you have to treat the two sorts of things differently. If, I use lots of intraday setups that work very well, and the buy and sell signals I do on the 1 minute and 5 minute, they work very well on two-way days. On trend days, I disregard them. In fact, actually, one of my initial tests in the morning for a trend day is have we had a 1 minute signal that has failed? Because that is one of the things I look at to consider whether or not something is a trend day. Because when it's a trend day, you basically avoid the other side. You don't counter trend. Trade.
And look at today too. I mean, look at where all the dollar ticks printed below zero. I mean, there are very few instances above 500. So, you could write an algo saying, what is the percentage of dollar tick below zero? What is the percentage of dollar tick above zero by certain time frames? And there's a system for you for understanding if you're in a trend day. As a matter of fact, we might do something with that. I just had that thought, Jack. It's pretty obvious.
Anyway. I think you've absolutely got to distinguish, because the thing is, if you are on a trend down day and you're looking at long setups and you're seeing what would normally work, and a nice reversal setup, I think I had 2 IHSs that formed and failed today. That is just what happens on a trend day. I didn't expect them to play out, because on a strongly trending day, it will run over everything.
Okay. Next question. It's about the skew index. Okay, the skew index is low. It's on the buy side. Does that mean that the downside is limited on the S&P? It does not mean that. What it means is the options world is not askew yet. In other words, is there any panic? Is there a black swan day coming? So, and by the way, dollar skew, I think for some of you who may not know, I'm sorry, I'm already there. Let's just take a look at skew. Okay, here's skew, the skew index. We're in this zone down here, which means that there's a lot of money in the options world. When you start seeing an elevated skew up here, well, guess what happens? That's block. This is black swan territory up here. This is like the predictor of a bearish move. Okay, this does not mean that in 5 days this can't be up here. Okay. The market's just unwinding right now. It really hasn't picked up any speed to the downside. All we have is a really, really nice reversal pattern, and I think we have a top at this point. The next back test is going to tell us a lot, but I don't see a new high from where we are. It doesn't mean that next week sometime the skew won't be up here at 136 to 140, which is where I really like to see it before we see a big decline. Okay.
Also, you've also got to consider that actually the beginning and the end of any trend are part of the topping and bottoming process. I mean, if we have made a top on this one, then yes, we're in wave 1. Does that mean that the top is in? It means that the high is in. Does it mean we're out of the topping process? No. And actually, quite often, wave 2 will be making the right shoulder on a larger head and shoulder pattern. That happens a lot. And you've got to. It's only really when you start wave 3 that you're out of the topping process and you're into the reverse trend. Yep, makes sense. If we had down to 1980, 1990 here, then that would be a nice wave 1 low. At that stage, are we out of the topping process? No, we're still in it, and we'll be in it until after the next rally, which is wave 2.
Next question is about Elliott Wave books and also technical analysis books. I think you could recommend a few technical analysis books, and I could recommend maybe a couple of Elliott books. Just to give you, and by the way, there are a few people with those questions, Jack, so this is about books. For me, and I think that you could go with the Prechter book, which is the very traditional 5-wave method, that I'm not a big fan of, and I think you could look at that and see if you like it. I mean, that's really a choice, okay? But Ian Copsey has written 2 books now on the wave principle and actually reorganizing it into a 3-wave structure. And by the way, that eliminates these, premature, early ending 5th waves and a bunch of other exceptions, okay? Just takes those exceptions away. So if I were learning Elliott from scratch at the very beginning, I would start with Ian Copsey's books. I think he has first of all, this stuff is fairly advanced, but I would start with his oldest book first, and after I got a feel for it, then go to his second book, which is more comprehensive. Okay, that's what I would suggest on the Elliott side. Jack, on the technical analysis side, what do you think?
I'm actually looking for them at the moment. I know I've got them saved. Yes, okay. What I tend to recommend, I haven't actually got any textbooks which teach what I do as I do it, because actually I came up with most of this. And Stan and I are planning a book at some stage, but we haven't actually started writing that seriously yet. The ones I would suggest, which are pretty good grounding, broad, and full of good, easily read and easily assimilated material, is I'd recommend Technical Analysis, The Complete Resource for Financial Market Technicians by Charles D. Kirkpatrick, and that's K-I-R-K, Patrick II. And I think for chart patterns, I suggest Chart Patterns, Bloomberg Market Essentials, and that's by Bruce Kamich. No, Kamich, K-A-M-I-C-H. They're both excellent books, and they're both well written enough that they don't leave you wondering what on earth they said at the end of the chapter.
Yep, absolutely. Okay, next question for commodities, CL and NG. Besides the levels you mentioned on the daily video, what indicators do you recommend in terms of watching the charts? And Jack, whatever you happen to want to say about this as well. But for me,
yep,
something that is really an important level on CL, and I do not talk about it, okay, is the 9 EMA. Okay, the 9 EMA on a daily basis, which what I have is I have an algo on my trading system where I have the 9 EMA on every single chart on a daily basis. The daily 9 EMA is on my chart, but I have it across multiple time frames. So that is a level on my oil chart that is extremely important to me. Okay, I watch that all the time, and it's amazing how often it is support and resistance. So that's a key one. On a daily basis, I also look at the 200 EMA. Very often on a larger structure basis, it is resistance. And I think, and by the way, these moving averages, guys, it's not about the moving average. The question you need to ask yourself is how many eyes are on this? Okay, and a lot of people watch the 200 EMA across the market. Okay, so that's something in general I look at, but the 9 EMA, even on natural gas, is something that a lot of people look at. It's pretty obvious. So those are just two to look at from my perspective, Jack. I'm curious what you have to say.
I think yeah. I think the 9 is something that an awful lot of people watch, and I watch it too. I think the Bollinger Bands, the daily ones particularly, although they're useful on a number of time frames.
And the middle too.
Yeah, I mean the Bollinger Bands, particularly the middle Bollinger Band on the 5-minute chart is something I use intraday all the time. It's and I think the daily middle Bollinger Band, we closed just below it today. I was watching that very carefully at the close because it's a very important level here. I think in terms of indicators, I think people don't use RSI nearly enough.
I would agree with that. It's a gift.
Yeah, it is. RSI is just great. I would strongly recommend using it. I mean, there's an awful lot to. I mean, you have to use it for a while and get used to it and look back and see what the price has done in the past. But I mean, RSI is a tremendous tool for giving you information. And equally, learn to use trend lines. They're important.
Yeah, I agree. Jorgen has a question about, would you say, this is for you, Jack, would you say Europe is ahead of U.S. indices when it comes to EW count? And, whatever, it doesn't matter about EW count, but do you think that Europe's ahead?
Are you saying, are they ahead of the American market in terms of where they are in the cycle?
Yeah.
Marginally at the moment. I think I wouldn't depend on these correlations, generally speaking, and they vary from top to top. But yeah, I think the American indices have been one of the last to concede and start going down this time. So to that extent, yes. Will that be the case next time? Not necessarily, no.
I think every rally or every decline is unique, and you got to look across the market. So, like I said a couple of weeks ago, the Nikkei had turned, okay, and it is ahead of everyone. Okay, so I think what you want to try to find across the market is who is the leader, and very often the NASDAQ is. So NQ gives lots of hints, but again, I would look across the market and try to find who's in front. And for me, clearly the Nikkei is leading the downturn at this moment in time. Manu has a comment. Great calls from both of you, especially the real-time ones. Keeping us on the right side of the moves. Manu, I just want to say that is what we try to do. If 90% of trading is staying on the right side of the market, and that's what we try to do. That's the main thing we try to do. Next question. Okay, you posted the other day a summary on the actual Twitter feed in the evening. Please continue that daily if it's not too much more work. It helps not having to log on to the website while running errands and catching up on phone. Okay, so by the way, we're open to feedback and suggestions, so if that helps to summarize the Twitter feed, we can do that in the evenings. I have no issue with that at all. Okay, for bonds, if day trading short, and this is your question, Jack, if trading short for bonds, how would you begin to analyze levels to look to short against? Or for this last wave higher, is it just better to wait for the topping process to finish? I am just watching at the moment. So David, what I'm hearing you say is, if you're day trading short, what are you looking for as a setup? I think that's what he's asking.
I think, well, I'd be watching the trend lines in the RSI again. They're very, very important. You can see, I mean, it's like, well, just like the SPX 1 minute yesterday. I could have done that on the 5 minute, I could have done it on the 15 minute, and I've seen the same pattern. But again, you got the trend lines, you had the break this morning. It actually retested perfectly that broken support twice and fell away. Yeah, draw those trend lines on the chart and you have a big advantage. The other thing is use the RSI divergences. When you see price make a higher high and RSI make a lower high, then you have a divergence. It isn't necessarily going to play out into a move, but it means there's a higher chance of a move. Combine that with trend lines and so on, and you know, it gets a lot easier to pick out levels.
Yep, I agree. The other thing and this is a specific TLT thing. If you look at TLT on a daily basis, just go back and look at the daily middle Bollinger Band. Okay, when it's in a decline, it's always below it, and when it's in a ascent, if it's bullish, it's always above it. Sometimes it comes down to test it, which is your entry for long, and it's a little risky because sometimes we go on band rides. But if we penetrate, if you notice 2 days ago, we penetrated the upper daily Bollinger Band, and what did we get? And what did I say? We're going to get a retrace. We get the bounce effect off of the upper. Okay, so looking at the upper and the middle as we do this advance higher up to 137, that's a way of looking at day trading it in terms of, you know, where did we finish, how will we open, that sort of thing.
Yeah, if you're trying to get it now for the short that is building on TLT, it's too early.
Yeah.
We need to get further down the topping process. You do not want to get in now, take a whole load of pain. And then probably be so dispirited by the time it gets back here that you sell out at the beginning of where the short's really getting going.
Yeah, I apologize. I should be pulling up a chart so we can actually look at it.
There will be a lot better entry on TLT straight ZB. At the very minimum, it should retest the current all-time high on TLT.
Yep.
And it should go, and most likely it's going to go higher.
Yep. Yeah, you can see here we punched it, pullback, right? We punched it, pullback. So you know, it's and pay attention to your RSI, because as you get closer up here to the top, up around 70, that's where you're going to be getting closer to a turn, and that's just a signal to start thinking about a short. Doesn't mean you're going to have one. I'd wait for divergence. I'd wait for the right setup.
The other thing is, if you're trading an instrument seriously, look at multiple time frames.
Yeah.
I will typically be running the 5 minute, the 15 minute, the 60 minute, the hourly, sometimes the 4 hourly, and the daily. I'll be keeping an eye on the weekly and monthly as well, because they all have something to say. I mean, it isn't necessarily so much that you know, it's necessarily always going to impact on each trade, but it is a matter of, if you have a train running in your direction that's on the weekly chart, you want to be able to see it. If you have strong negative divergences on the weekly RSI, you want to be able to see it, because these things can affect trend, and they can turn the trend. So, and when the trend turns, you want to be aware of that.
Yep, absolutely agree. Okay, Ryan has a question, and this is an interesting question. How did the two of you get connected, and what's the story? So, We were both in a trading room many years ago, and I won't mention the name of the trading room, and Jack, you know which one I'm talking about. And I left the trading room just because of the style of people there. It was kind of egotistical and whatever, self-serving and whatever, and it didn't appeal to me. Okay, it wasn't like a collaboration, and I think, you know, as a trader, it's important to have other people's viewpoints. And I went off and joined Mike Vaki and actually helped him get started with Princeton Trader. I was one of the original people in Princeton Trader, and Jack came along and joined, and I was talking about, you know, these swing trades and those swing trades and the charts and technical analysis, and he started posting his charts, and we just have a kinship. I mean, that's how I would describe it, Jack. I mean, we're both chartists. We both look at instruments across the market. We both like to swing trade. We both like to day trade. And Jack's been at it for a long time, and so have I. So it's really great to find a partner, you know, in this world of trading, because you know what, people all have their own stuff, and everybody has this attitude. And Jack, you can speak to this better than I can. They have this attitude that my stuff is better. Okay. And it's like, you know, my system's better than, you hear the EW people say, well, my stuff is better than classical analysis, or vice versa. And we don't have that attitude.
No, actually, incredibly, some of them will say, well, I heard this most recently from a volume profile guy whose work I actually like and respect. But I mean, and he was saying the only type of analysis that works is volume profile analysis. Nothing else works because this works. But actually, that doesn't follow at all. The world is complicated. The market is complicated. There is more than one way of reaching a conclusion. It's and to assume that only one way works is just stupidity. And different schools of charting will see different things. And Stan and I were comparing notes on instruments because we were finding that where we were had the same sort of conclusions coming from our different approaches, we were getting a tremendously high hit rate.
Yeah, it was amazing. I was calling turns, he was calling turns, we're calling the same turns at the same time, and then you got to get interested in, so what are you seeing, Jack, and what are you seeing, Stan? And it's like we're looking at it differently, but we're coming up with the same answer on key pivots and so forth. So, you know, you have to appreciate when you find a partner that is that you're able to collaborate with, and you're able to make beautiful music with, you know, as far as I'm concerned.
Yep.
Okay, next question talks about our hit rate, I haven't done the last time I've been looking at our hit rate, Jack, we are typically in the 70% range on Chart Chat. I haven't done anything on the Twitter feed to look at our hit rate on day trading, but I can tell you this: day trading, our hit rate is likely to be much higher than swing trading. Swing trading is a lot more complicated. Okay, like, you know, being the guy in the evening that sits back and looks at the chart and says, okay, you know, here's what's likely tomorrow. That is a lower odds play than day trading. Day trading, you can have a lot higher percentage hit rate, okay? But the last time I looked, our hit rate on Chart Chat was 70%. We range between like 68 and 74%. And I haven't done anything on the Twitter post, but that would be an interesting exercise just to look at that.
Yeah, and we need to start mining the old Chart Chats for more information. I mean, because 6 months ago, a year ago, if you're on the Chart Chats, you probably remember me talking about the yen and talking about the possible bottom that was forming there, and the IHS, and where I thought it would rally to, and why I thought it would rally, and so on and so forth. And a few months later, this is exactly what we're seeing on the yen now. It's doing that rally. It's there's been a lot of things like that.
Yep, agreed. Okay, let's get to the next question. Do you ever use Bollinger Bands on RSI? Jack, what's your take on that?
I've never used Bollinger Bands on RSI. That's not to say that they're not useful. I wasn't actually aware that you could use Bollinger Bands on RSI. But I might have a look. I think I tend to use them separately. They're both incredibly useful on their own. Could they be useful together? Yeah, maybe. But I have no experience of trying it.
Yep. I've used Bollinger Bands on like dollar tick, and I've used Bollinger Bands on some other things. And but let me make this really clear. And how do I say this? Traders make trading complicated. We can, you want to really see a complicated chart. I mean, I can make a really, really complicated chart, and I can have 5 indicators, and I can have actually a trading system in there with, I could, and by the way, the more indicators you have, I think the more confusing it is when it comes to make a decision in real time. So my advice to you guys is, and I went through a period in my trading world where I explored every damn indicator out there and every damn system out there. I went through more indicators, and I wrote custom code, and I've been there and I've done that. And I'm just going to say my conclusion is make it simple. Make it simple. Learn to work a chart. Learn to read the market. Learn to feel the market if you're day trading. Really, okay? You'll be far more successful, and when it comes time to make that choice in real time, you'll be able to do it much more easily. That's kind of my thoughts about that.
The other thing to do is you've only got limited time because you're human and time is limited. And the fact is, you can either, in the same time that you became barely competent at looking at 10 different indicators, you could become really good at looking at 2.
Yeah, I think going deep in 2 is far better than going shallow in 5. Excellent point, Jack. Excellent point. Okay, agree on Twitter posts. Would be helpful to get your quick text synopsis as early as possible. Okay, I was doing that for a while. I didn't know if you guys really appreciated that. And sometimes what we need is just some reinforcement. So, Fred, thank you. And what I'm going to try to do is at the end of the day, just post, hey, here's what might be happening over the evening and what might be happening tomorrow, given what happened today. I've done that before, and I'll try to do that because it takes me easily an hour and a half, at least an hour and a half, sometimes longer if I'm having, Vimeo issues, to get the damn video done and get it uploaded. It takes time, and I know it's kind of late in the evening, so I'll try to do that from now on. I think that's useful, and I'm aware of how late posts affect people and so forth. So anyway.
And equally, I can do that. I did post the wedge on the feed yesterday.
Great. I think it's great at the end of the day to do something like that. I think, yeah, excellent, Jack. I think this is a question for you. Can you explain why the upcoming TLT short will be such a strong turn down, and what would be the rough down time frame? If you want to show a chart, Jack, I'll throw you the screen.
Yeah, hang on. I'll pull up. Hang on, let's come back to that one. Let's do another question while I'm pulling up charts, and then I'll explain it.
I'll just give you, well, I'll tell you what, I'm going to let you answer the question. I have a chart too, but I think that TLT is sort of your game, big time. Jack is a great bond trader, and he is a great bond analysis person. So I think he's definitely someone to listen to on that. I primarily use fibs and am branching out into other tools. Having trouble finding a good secondary and tertiary indicator. Would love to hear your top 3 recommendations for me. Ryan, RSI. Okay, yeah. Fibs and RSI are critical. So, like, for example, if you have 100% fib and a 1.618 fib, right? Well, how do you know where the market's going to turn? Which fib is it going to turn at? Well, look at your RSI. Where are you in RSI? Are you anywhere near the 70 level or the 30 level? Do you see a divergence? I think that would be my suggestion for the next indicator to look at with fibs, Jack. What do you think?
Yeah, I agree.
Yep.
RSI is an amazing indicator, which is massively underused.
Yep, I agree. Are you ready for charts?
I've got the main one. Actually, let's just do another question because it's another one I'd like to pull up as well.
Yep, no
it's
problem.
Just we're diving into the really, really long-term stuff here.
Yep, okay, sounds good. With NG at a major inflection area and a possible definitional low coming up, can you cover it more frequently on the daily video, like 3 times a week? Yeah, Manu, that is not really covered in the subscription. But what I will do is, I know people trade a lot of different things, and what we can't do is cover everything, because guys, what I try to do on a daily basis, and I really try, and I know sometimes maybe I need to work at it better, but I try to keep it to 10 minutes, okay? I try to do a summary in 10 minutes. If I add more instruments, it's going to become a 30-minute video, and I don't want to ever do that. I want to keep the daily stuff really short. We have time on the weekends for something more expansive, so I try to cover it on the weekends.
I think there's something to add to that as well, which is that people don't want the videos to be too long. Yeah. And we get requests to make sure they're not too long.
Yeah, right.
So, I mean, it's a balance.
What I will try to do is, if I have a bonus chart situation, okay, like NG. I like NG a lot because I trade it a lot, okay? I really like it. So what I'm going to do is, when I cover it on the weekend and when I post it as the weekly bonus chart, I will cover it on Wednesdays. I'll do it at least twice a week, okay? Now, if you're a swing trader, having some support twice a week on a swing trade on NG is probably a good thing, okay? Maybe I guess once a week maybe isn't enough. So I get the message. We'll do that twice a week now. Okay, Bollinger recommends it because the OS and OB levels become dynamic. Yeah, absolutely agree. Comments during the day as you read the market most helpful. Thank you, David. How are you anticipating price moves during the day is very educational. Okay, so commentary is what I'm hearing David request, not just charts and stuff. In other words, how we're seeing price, move. What are your thoughts on that, Jack?
It's tough, and the reason is adding a lot more to what we're doing on the Twitter feed intraday. It's just we've got to remember that we've got to do everything we're doing, and we've got to trade as well.
Yeah.
There are only so many hours in the day. I mean, and we're already working. I don't know. I mean, I think Stan puts in similar weeks to me. I usually put in a 60 or 70-hour week. Yeah. I'm cautious about adding things, adding extra things into that workload.
I think the thing we can do is, like, I do some comments in the morning about, okay, we're at this level, this can happen, watch for this resistance. I mean, those are the kind of comments I think you're asking for, or watch up volume or down volume. I think it's more about, what your comments about what we're seeing, I think is what they're asking for. So I'm happy to try to do some of that, but I can't do that all day long. I can't. It's just not possible. With all the other stuff that I'm doing in terms of trading and family stuff, it's pretty tough. How you are anticipating price moves, and it's the anticipation of price moves. Okay, very good. Thank you. Do you use volume, and I think you mean volume profile, Fred, in your analysis? I can't remember you referring to volume, but some consider it key. I think auction type analysis, which is what volume profile stuff is useful in day trading. I think it's also useful in swing trading on a bigger picture basis, but I don't know, it's just not my style. I think every trader, and by the way, I think that for some people it works really great, and most of those people are day traders, by the way. But for me, I think every trader is different in terms of what works for them, and my advice to you is find what works for you. Do an experiment, try it. If it adds value, if it increases your hit rate, great. Add it to the mix. But if it isn't, or if it's not your style, look for something else. Okay, I think we each have to find our niche in terms of what we do.
Yep, and you got to remember also that Stan and I do not cover all of TA. Yeah, we've got our own specialities. There are other specialities like the volume profile at which we are not expert.
Okay.
And at which it would take a very long time to become expert, because it takes a very long time and an awful lot of work to become an expert in any of them.
Yep. There was a question about training videos, and I'm sorry I skipped that one. I was just going back. I did miss a question. The training videos, what I want to say about the training videos is, guys, you have to go back to previous posts, and the training videos are there. We are about to get a new website. And this is probably worthwhile for me just to spend a minute on this, Jack. And when I finish, I'll throw you the screen and you can do your TLT thing.
Yeah, I'm ready. I'm ready with the buns.
Okay, very good. The new website is going to have a trading education tab. Okay, we're going to have multiple videos there in a library kind of format. You will be able to go through and click and use them. So the new website is really sexy. I really like it. It's very professional. I'm really excited about it. I think in a week I'm going to do like a little tour so you guys can see it. And we're going to be doing a transition, which is going to require you to key in your email address and then key in a new password. So you will each have your own username or email address and password, okay? And so it's going to make our administration a lot easier. And the parts you don't see, guys, I got to be honest with you, we do a lot of heavy lifting with administration and renewals and people with credit cards, and it's like, God, it's a lot of work. So this is going to help us a lot. We'll have more time to spend doing what we love doing. I think that's the main message. But the training videos, I think you're going to find the new website easier to use. Right now, what you have to do is go back in history, and you have to click the videos on old pages at this point. That's the only way to get to them. Okay, you ready, Jack?
Yeah, let's go.
All right, throwing it to you for TLT and bonds.
Right. Okay, we're just going to blow up this chart quickly, and I'll show you what I'm talking about. Now, the reason we're expecting a big reversal on bonds is because bonds. Bull and bear markets in bonds are different in terms of the length to equities. They last a very long time. What you're looking at here is the TNX chart. Obviously, this is the 10-year yield, and this is a 40-year chart. So it's over a long time. And what you're looking at there is a bear market in 10-year bond yields. And here is the bear market in 30-year bond yields. And obviously they last a very, very long time indeed. Now, when it turns, equally, it tends to last a long time. Here is a bull market in bond yields, and here is the bear market in bond yields. This one here ran up, started in 54 and ended in 1980. So that was 26 years. This one, well, 82 really, so 28 years. This one here, the bear market, i.e. the bond market in bonds, started in 82 and is topping out now, very likely. Yeah. Now this is when we see this turn, and this is why I was making comments like this is a high that may not be repeated again within my lifetime. This is because we are talking about the difference between, it took for, let's say interest rates at 3, yeah, that was in 58, and it moved up from there. When was the next time it reached 3.7? It was here, it was in 2009. There was a 50-year gap in between those two. Now you just think about that for a moment, because also this is a huge factor in the world around us. The fact that interest rates are at historically incredibly low levels is something that everyone just assumes will always be the case, but it's not. The reality is you get long bull markets and you get long bear markets. We're at the end of a long bear market in bond yields. When it turns, then it's not going to come back for a very long time, possibly for another 50 years. And that it's a hard thing to get your head around, especially when you're used to looking at equities where the bull markets last 2 or 3 years, or maybe 5. The equivalents on bonds last decades, and actually the impact on policy and everything else in the world around us from having higher or lower interest rates is huge. The current era with QE and free money, etc. I mean, this is all basically an artifact of the blow-off top on the biggest bond bull market in history by a mile. It's and when that ends, it is going to change a lot of things. But one thing, of course, it's going to change is bond prices. Now, when I posted this in, I think it was February last year. I think it was February last year. Yes, it was. When we made this high, I posted this on the day or the day after or something, and it was a couple of days before, and I was saying that I was looking for resistance here at this trend line because this was the lifetime pattern on TLT, and it reversed there. And what we're looking at here is we've come back, we've retraced. We should at least retest that high, which we've already done, and it's possible that we're going to retest that high and fail this time, that we would have to have nested double tops. There's good reason to believe that we're going to go higher, and I'm looking, and as this is, if we are going to break down from this pattern, it would not be at all unusual to break, do an overthrow of this resistance trend line. So we'll see. I mean, I've got this at, I think resistance about 142. That's at the outside of what we're expecting. But you know, we'll see how it develops. We could overthrow this and then break down, and then that would mean I'm not expecting this rising megaphone to get any further, i.e. the next hit, the next high we make, the next all-time high we make, when we see a serious reversal of that, that's probably going to be the last. And TLT will see 90 before it ever sees it again. Yeah. Or considerably lower. But actually, if you just look at this TLT lifetime chart, TLT was launched in 2002 and it was at 45. We're now triple that.
Yeah, right.
This is just a small element of the huge bull market on bonds.
Yep.
Which has just been epic. Epic, mate.
It has been. I have a cycle chart on bonds too. I'd like to show Jack.
All right, I'll throw it back.
Yep, great. Now, there's something about a cycle chart when you ask a question like that, Fred, in terms of the extent of the move and why you think it's going to be a big move down. And by the way, the big move down may not be a sharp move initially, okay? But I want you to think about, and I'm going to back this out in a minute, but I just wanted to show you I have some high windows here that occur, roughly speaking, in the May to June time frame, okay? May to June time frame is where we sort of top out. Now I want you to notice the yellow cycle. Okay, this is the 18-month cycle. This is a good longer-term swing trading cycle. Okay, so we have a low that's lining up down here at the beginning of the year next year. In 2017, in January, February, this sort of time period, okay? It's lining up in this area. Now these will change as the market moves around, okay? But shorter term, 17 is going to be a significant low window, like this was right here, okay? Here's a significant low window, okay? Here's another significant low window. So the yellow arch, significant low window, we will be significantly lower from the June time period until January. Now, let me back this out because this is important, okay? I want you to look at the larger cycles, okay? Look out here in May and July, May through July, in that period of time in 2018, okay? There's a more significant low window out here, okay? So when you think about trading bonds, and let me just throw this in for good measure, guys. When you think about who is running for president, okay, and the candidates and the kind of people they are, and by the way, I'm not trying to make this a political statement in any way, okay? I'm not supporting any one of the candidates, but you know, some of them are a little kooky. I'm just going to use that word, and I just have to say, you know, one of those kooky people get into office, what do you think is going to happen to the stock market? What do you think is going to happen to real estate prices? What do you think is going to happen to bonds? Okay, so that's just me saying, you know, there's some real-time live stuff coming that makes me look at, okay, when's the next major low? Another major low to look at is the red cycle. If you're really into longer-term trading, okay, the red cycle comes due in 2022, out here in the fall. Okay, so I'm not saying that these lows are going to happen, but you know, time and price do play together pretty well. Okay, and if you pay attention to cycles, so we have a shorter term cycle here again in 17, out further in May of 18, and then out further in 22. So those would be three definite low windows to pay attention to. And so this is not a day trade, guys. This is a longer term trading strategy to look at trading bonds once we make this stop. I just wanted to add the time element, Jack, to the question. I think it's an important question as well.
All right. And actually, I'm just going to make one more point. If you throw the chart back.
Yeah, sure. We'll do. Let me go ahead.
Because this is talking about the longer term charts and the practical relevance of them.
Yeah, right.
This is the TYX chart, the monthly chart, and what is the practical relevance of this monthly chart, and why should you have a look at it? Well, I've got a post on my site from the beginning of 2011 where I called the possible resistance level here. Yeah, and it was a massive reversal, and then bond yields halved. It's and why was I looking for resistance there? Because I was looking for channel resistance, and we already had the points here, trend lines. Was there resistance there? There certainly was, and we reversed back down. What were you looking at when you got down to here? Well, low, low. This is clearly a support level. And I drew in this possible IHS, and it broke up, but I mean the fact is we're looking at bottoming action here. If you're thinking what relevance does have to trading, how handy would it have been to know that it was likely to reverse there? Extremely.
Yeah, absolutely. That's like
how handy.
Yeah, right.
How handy is it to know that it's likely to reverse here? Extremely. It's and on the longer term charts, you can see these sorts of levels, and you can make those kind of calls.
Very good. Next question. I really like the long videos. Just saying. Very good. Thank you. And I appreciate that. It's good to know that. And by the way, I'm assuming you're talking about the weekend videos and maybe even chart chat. Okay. You're both doing enough. Just wanted you to know it helps. Thank you. That's good to hear. Right now, I am spending a considerable amount of screen time watching the market closely. Eventually, I will have to decrease this to be sustainable. Can you talk around your experience in moving between day trading to position trading and swing trading and weaning yourself off the desire to watch the market all the time? Okay, I won't mention who posted it, but I will answer the question. I have one thing I want to bring up. How much of that is psychological? Okay, you got to ask yourself the question, why is it that I have to watch every tick in the market? Okay, and psychological is one of the 3 different skill sets of trading, right? So if you're anxious, you're going to want to watch every tick. And if you're watching every tick, what's going to happen to you is you're going to get out of the market, you're going to get out of a move too early. People who watch the market constantly, they get into moves too early and they get out of the move too early. So
that's absolutely right.
Yeah, so an experiment to try, okay? And by the way, there's a certain amount of time you got to put in the chair, okay? The 10,000 hour thing, right? And you got to learn how to trade and all that, and that's all required. Now, the thing that helps a lot, and I just have to say this, if you're moving into swing trading, you have to not care. Now, I know that sounds counterintuitive, but you have to not care, okay? It's like my TA says this. Oh, look, there's a reversal pattern. Oh, look, across the market, I have this thing happening, okay? And I have my 4 or 5 things that I put together to say, hey, this is a potential swing trade or position trade, right? I put on my position, I put in my stop, and I don't care what happens, okay? Now, do I need to watch it? I wait until the end of the day, and then I find out what happens. If I'm swing trading and just looking at it, and I look at my trades at least 3 times a day, guys. Okay, so I'm not, and sometimes I get tied up with family stuff, and I'm not looking at my trades, and that's fine too. Okay, but I think psychologically there's a way in which you have to, how can I say this? Thank you. It's distancing yourself and not. It may be driven by anxiousness or fear, and the anxiousness and fear very often it's driven from past losses. Okay, and this is really important. Have you forgiven yourself for losing that $50,000 loss that you had or whatever? Okay, and I went through a period of time in my life where I was very anxious because I lost hundreds and hundreds and hundreds of thousands of dollars. Okay, and coming back from that was very hard. And so wanting to watch the market all the time, having it driven by anxiety, let me tell you something, I understand that. So, my advice is do what you do to understand the market, put on your position, and walk away and let it go. You got to learn to let a trade go. And that's my answer to the question, Jack. I think it's a very important question.
Yeah. We did cover some of these things in our trader psychology webinar. Might be well worth having a look. But I think there's a couple of things we were talking about. The feeling that you always need to be involved, you need to quash that. Basically, you're looking for setups and you're trading those setups. If those setups aren't there, you don't want to be involved. And if you aren't in a position where you would be thinking of exiting, then you don't particularly want to be involved there either, because the thing is, you're in, you let the trade work. It's the other thing is, I mean, in terms of you can paralysis by analysis.
Absolutely.
Is a real factor. You can always find, if you look hard enough, you can always find a reason why a trade isn't going to work, even when it is. And the reality is, if you read, what everyone is writing and so on, then you'll never actually, if you have too much information coming in, then you will never make a decision at all.
Yeah, that's right. Keep it simple. The other thing,
you have to choose, and you have to refine your own methods, and you have to work out what's important, what's not.
And the thing that helps a lot is keeping stats. So, for example, I know if I'm really trading badly, I'm in the 65%, 60% range of being wrong, okay? And I know if I'm really on, I'm in the 80s, okay? So, putting something on and not caring is about knowing your stats and knowing, hey, I'm averaging this month or this quarter this kind of hit rate, okay? It helps me. I don't mind losing 30% of the time. I really don't. I think it's great because the other 70% I'm making money. So, that's another thing that can support you to not be anxious is know your hit rate. Okay, if you don't keep stats to know your hit rate, it's not helping you. Okay, you got to learn to support yourself is I think the message I'm trying to say. Okay. Yeah. There's a question here. Would be cool to include a slot in your updates only if you see an especially strong setup in another instrument. That's interesting. Like NG, for example. That's a great idea, by the way. We might consider doing something like that, like a setup. I don't know, maybe a morning window on the Twitter feed, key setup for the day or something like that. I don't know. That's a great idea. There's a question here on copper. And the question on copper is, what are your thoughts on copper after the fall today? Jack, you have any thoughts on that?
To be honest, I haven't actually been charting copper much lately, so I haven't got anything particularly current.
Let me take a look at that.
I am going to, while you're answering it, I'm going to pull up my charts.
Okay. Do I have the screen or do you have the screen?
You have it.
Okay. Very good. Sorry, I kind of got lost there. I think this is the last question, by the way. I don't see any other questions. So, guys, I think we're probably done here. HG, okay. I would say that we are through our area, okay? We were looking at a 3 down. We were looking at this area for support, the 110 to 113, and we had the back test, and we have gone and we have broken the channel support here. And by the way, I can see trend lines without drawing trend lines, okay? So as far as I'm concerned, this is overdone. RSI divergence, let's just take a look at it. The RSI divergence that we had building is gone, okay? So what I would expect is another low. So I'm expecting a bounce and some divergence here. So like this kind of setup here where we would do this and then this for a turn. And my sequence here is as follows. Let me get rid of this. This tells me something here that we broke that. It tells me that from the monthly S1, which is where we are right here at 2,790, okay, we're going to get a bounce. And I'm kind of doing this real-time live, guys. We're going to get a bounce, maybe a double bottom or a marginally lower low, something like that. And then we're going to get a relief rally, a squeeze, and then I'm expecting lower prices. And let me just think about what that might mean in terms of where we would go to on copper. Let's see.
I've got a chart to show after you finish, by the way.
Yeah, I'm about to do a measurement. I'll tell you what, let me throw it back to you, and then I'll do the measurement, and that way you can talk through your thing. I'm going to give you guys a turn area down here. Now that this has done this, and I'm expecting a bounce back up towards the monthly pivot, I'm going to give you a target in this area in a minute or two. But let me throw it back to you, Jack, so I can do the measurement while you're talking.
All right. This is actually another longer-term chart.
Okay.
I just want to, I haven't looked at this in a while. And
by the way, my theory about copper is it has turned. Okay, I think copper has turned. I think the low is in copper. Okay, I just wanted, sorry I didn't mention that.
We are on a weekly buy signal. I'm wondering whether it's going to deliver. The last one didn't. But all right. Anyway, what I would say is this is my big picture copper chart. I do actually still have. I do have a note here that I wouldn't rely upon this head and shoulder target because it starts so early in the uptrend. Because it's upsloping though, the target of the head and shoulders is actually above the last low. So I don't know. It's something I'd be bearing in mind. I've got a target of 1.5, which I drew this. I think I probably did this chart. Yeah, I usually extend them past the screen, so I probably looked at this last year and a half ago. This is the resistance trend line here, and when this breaks, then that is the confirmation that the trend is broken. You've got 1, 2, 3, very nice resistance trend line. I've currently got that in about the approximately 2.55 area. I might be able to, I might have enough to do a pattern on it here. I'm not sure I've got it yet, but my awareness here would be there would be a risk that it could come down as far as this. I mean, this is a nice bounce from here. What I'd be looking for here is a reversal pattern to form. And I've got to say I've got a very nice inverse head shoulder potential neckline in the 2.5 area. But this is the key area just above. 2.59, 2.58 or something. I've got declining resistance. When that breaks, that should confirm that this long bear market is ending.
Yeah, I think we're very close to the end. I now see something else on the daily basis. If I can just share that, Jack, real quick.
All right. Yep, I'll throw it back.
Yep. Okay, on a daily basis, what I'm looking at here is I'm looking at a daily basis reversal pattern here, potentially, okay? So again, we're at the monthly S1. We're also at the 618 of the decline, of the advance rather, this first leg up. Sorry, wrong indicator here, that's a W, okay? I'm looking for the X, okay? And I think what we're going to do is we're going to stay inside of the golden ratio zone. So for example, right now we're at 2008.55-ish, right? That's the 618. Typically a back test, once you hit the 618, it stays inside of this golden ratio zone. So 217.60 would be maybe the bounce, right? And then lower prices. I do not see copper going lower than this swing right here. Okay, I think we need to get back inside of the W to X swing. I don't see copper going lower than 200, okay, on my chart, which is roughly where the monthly S1 is. So I'm looking for a turn right here at the 200 area, and then from there, a large advance up. And I think the big question is going to be what's going to happen when we hit the trend line, okay? So I'm looking for a three-way move, and so I'm waiting for the setup lower, and I'll probably cover that at some point on a chart chat. But right there you can see the RSI trend line. The RSI trend line is telling you it's still in trend down, guys. There's no real serious reversal pattern here yet on a short-term basis, but on a longer-term basis, I wanted to show you this. This is possible. We break the monthly S2, okay, which is at 197. We're looking at a new low. Okay, so there's your risk when we get down to 200. That's how I would frame that up. Okay, if bonds are beginning a big bear market, does that mean stocks are a long-term buy? What's the correlation? What's your sense of that, Jack?
Well, we've been in a bond bull market since 1982. Have equities been a terrible buy over that whole period? I think you'd have to go with the answer no.
Yeah, would agree with that.
But I think the correlations that people look at aren't reliable correlations, and they if you look at the long term, I've shown this on the SPX versus TYX over a long period. There are long periods where the correlation reverses and bonds and equities will go up together, and there are short periods. Even in the last few years, there's been a period of a year when they've gone up together. It's not a long-term correlation that you can rely upon. I'd strongly recommend not relying upon it. But no, it wouldn't mean that. If it did mean that, that would mean that equities had been suffering enormously over the last 35 years. I think it's pretty obvious that's not the case.
Yep, absolutely. Guys, I think, Jack, that's a wrap. We're out of questions. And by the way, guys, great questions. We're going to do this monthly. Thank you for coming. And Jack, great job as always.
Oh, pleasure as always, mate.
Yeah, pleasure here too, Jack. Take care. All right, bye-bye.
Oh, hang on. I've got one more thing.
Yeah, sure.
One more thing. I've just drawn something in.
Yeah, sure. Hold on. Okay, here we go.
Sorry, while we're looking, I've been playing around with the copper chart.
Great.
And what I would say is, look, it's nice. Very nice falling wedge. It has broken up. Might be coming back for a retest. Possible double bottom setup here, which reverse, come back down, retest that low and up. But that's a nice setup. So you're all right.
Where's your upper trend line come in, Jack? Roughly speaking, I want to see if it matches.
The upper trend line. This is right here. I've got it at 2.59.
Yep. Okay, that's roughly where mine is. 2.5. Right. Okay.
And
good.
I've got to say that is a gorgeous resistance trend line. 1, 2, 3. It's just beautiful.
Yep.
All right.
Yep. Very good. I think that's a wrap. I don't think there are any other questions. So
I think it is.
Take care, everybody. See you on the Twitter feed. Trade them well. Take care.
Pleasure as always, mate.
Pleasure too, Jack. Take care.